Today on Forbes, how Donald Trump Jr.'s fortune jumped sixfold in a year. In May, at a Bitcoin conference in America's gambling capital, Donald Trump Jr. bragged to a cheering Las Vegas crowd about all his ventures into cryptocurrency. Sitting on stage beside his literal crypto bro, Eric, he rattled off digital asset business after digital asset business. He said, quote, "We're very long crypto. I mean, it's a huge part of everything that we do right now." It is certainly a huge part of his fortune. Last year, the president's oldest son was worth about $50 million. Today, Forbes estimates the president's oldest son to be worth somewhere in the ballpark of $300 million, 6 times higher than in November 2024, and he has crypto to thank for it. For starters, there's World Liberty Financial, which has turned into a cash cow for the Trump family. The venture has now sold off an estimated $1.4 billion of tokens, with a slice of that going to the Trump family, though exactly how much remains somewhat of a mystery. Filings indicate that the president received roughly 52% of the proceeds at the start of the year, with his family members, presumably the 3 listed co-founders, Eric, Don Jr., and Barron, splitting 22%. Later deal-making could have changed the economics since then, but if every heir got 7%, that would leave each with roughly $80 million in cold, hard cash after taxes. Then there's the WLF stablecoin, issued by World Liberty Financial. Since its debut earlier this year, it's added another estimated $19 million to Don Jr.'s net worth, assuming he and his siblings own the same share of that business. Beyond that, there's a locked-up stockpile of World Liberty tokens, which might be worth another $34 million or so, even after applying hefty discounts because they cannot currently be sold. Don Jr.'s largest single asset may be a stake in American Bitcoin, a crypto mining company that he and his brother, Eric, co-founded in March. Securities filings show that Eric holds 7.3% of the business and lists Don Jr. as an investor without specifying the size of his stake. But an analysis of SEC documents suggests he probably owns somewhere between 1 and 5% of the business. If Don Jr.'s stake is on the higher end of that range, it could add another $80 million or so to his fortune. It used to be worth even more. Forbes estimated his net worth at around $500 million in September, thanks largely to American Bitcoin's value. But the company's stock has slid since then. Non-crypto ventures are going well for Don Jr. too. Just last week, his 2 million shares in a special-purpose shell company called New America Acquisition I Corp. Boosted his bottom line by more than $20 million overnight, after shares of the company began selling for a bit over $10 each on the New York Stock Exchange on Thursday. The president's oldest son also has an estimated $10 million tied up in shares of a grab bag of politically plugged-in companies: Dominari Holdings, a financial firm with offices in Trump Tower; Public Square, an anti-woke online marketplace; Grab-A-Gun, an online firearms retailer; Unusual Machines, a drone manufacturer; and Trump Media and Technology Group, Truth Social's parent company, which has also taken a turn toward crypto. His New York City co-op, a 3-unit combined apartment 1 block from the East River, and his Jupiter, Florida home, which he owns 50% of, are each up about $500,000 over the last year, now worth a combined estimated $12 million. A victory in court where appellate judges threw out a penalty from the Trump Organization's fraud trial boosted his net worth by another $5 million or so. Meanwhile, he raked in an estimated $3.2 million in 2024 from new licensing deals in the United Arab Emirates, Saudi Arabia, and Vietnam. 2025 deals in India, Qatar, Romania, the Maldives, and Saudi Arabia again are sure to add to that total. And Forbes estimates that his share of the sprawling family real estate licensing business is worth $34 million today. For full coverage, check out Kyle Kahn Mullins' piece on forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.